Earlier you mentioned that it's a bit of the Australian economy is facing almost like a negative tsunami. Over what period of time would you expect that the impact of this falling iron ore price, our reliance on a single customer, and the lag between the rest of the world, which has obviously gone through substantial difficulties, at what point do you think that's going to land on Australia's plate and really sort of show its colours?
Right now, I think that what we see, so I always operate on a 9 to 12 months lead lag between a macro impulse and the reaction to the economy. So what happened in October, November last year was, of course, that China changed its mix-up of growth. So instead of going for growth at all costs, now they want quality growth, which is really a shady way of saying that they want to consolidate the party power. But leave that aside, the fact is that they are putting less growth into the world market, of course, indirectly through your question, iron ore has come off, there's overproduction, relatively speaking. But if that process started in Q4, as we talk today, I think the full ramification, the full impact will be felt in Q1 and Q2. So I'm actually very constructive, not only on iron ore, but also even the Aussie dollar, which I've been very negative on for a long time, that when we see the low in terms of growth in the world, global growth, and the low in terms of inflation expectations in Q1 and Q2, it becomes a huge opportunity to buy into the resource side. So basically, the trade I want to do for 2015 is to be short any financial sector and long the tangible assets. Exactly the opposite of what has been a good trade this year. So, this week in Australia, you have Fortescue. The stock is now trading below $3 again. It's done that 3 or 4 times over the last 6 years. It's always been a great opportunity to buy into it. This time, however, I think, the pain is going to be there for longer because I think the impact is now finally being felt from the impulse. But here, market now pricing $60 on iron ore from Citibank, of course, but increasing the market will do the same thing. And I think that's way to the downside, or relatively speaking, because you have to remember at the end of the day, the world will continue to grow as long as there are demographics. And we are very close, in my opinion, to this crisis point where we release productivity innovation, because the politician cannot continue to do as many mistakes as they have been in over the last 10 years. Which has been, what I call extend and pretend and not moving the agenda forward. I think there'll be such a crisis in the Australian economy, in the European economy, even in the US economy, that we get this mandate for change that will release investment into the small and medium-sized enterprises. So when we start investing in paper and move towards productive, tangible assets, which I think 2015 will be about, then we have, sort of a football match of 2 halves. The first half we will be down 3-0. Everything being equal, we should be able at minimum to draw in the second half, but if not, maybe even pull ahead and have a small victory. But to me, 2015 remains the change point, the low point of inflation expectation and growth.